Hello everyone. A week ago, I made a video like who is doing the injection selling in the market. I think most of the people agree with me. Basically, traders who do injection selling manipulate the market by using the other stock or sector momentum, which all we discussed on that video. But if we don't use other index stocks momentum means, then how much money we need so we can manipulate the market. For example, if I want to increase the Nifty or Bank Nifty by 100 points, then how much money I want. Same way, if I want to increase the HDFC Bank share price by 50 rupees means, then how much I want. Actually, this question was asked by one of the viewers in the comment section. So I requested him, can I show the comment snip in the video? For that, he agreed. Thanks for that, and also thanks to him for asking this question, which sparked my curiosity. So in the last 6 days, by experimenting with various live market data input, I kind of roughly estimated the amount required for manipulation. Hence, in this video, we are going to look about the details. Just for info, I'm really proud of it since it's my own work. I haven't seen any textbook or any already established calculation. So if anybody got any suggestions to improve it, please let me know in the comment section. So without delay, let's get started. In order to understand how much money we required, we need to understand the liquidity in the market, which is nothing but understanding the bid-ask spread. This bid-ask spread, typically we can define that by the NSE term called impact cost. If required, please pause and have a look. This is the list of criteria for a stock to be one of the Nifty 50 stocks in the Nifty 50 index. As we see here, the first and foremost criteria for a stock to be in the Nifty is the impact cost of 0.5% or less during the last 6 months. And for all the listed stocks, the average daily impact cost, we can find it in the NSE India website. For example, in this HDFC Bank stock page, the impact cost of HDFC Bank is 0.01. However, NSE India website didn't give us the impact cost for the index like Nifty or Bank Nifty. So from the future market volume, we have to calculate the impact cost on our own. So it's important to understand what is impact cost. Any stock or index theoretical price should be the average of the bid and ask price for the total bid ask quantity. But in reality, market aren't always perfectly liquid. If you place a large order, it might push the price up or down away from the theoretical price. This difference is called the impact cost. For example, let's take the NSE India website explanation. Consider this as the bid-ask spread of, say, the ABC share. 1000 quantity was offered by the seller for 99 rupees and a buyer is ready to buy that 1000 quantity for the price 98 rupees per share and so on. Let's say I want to buy 1500 shares. Here, the ideal price will be 98 plus 99 divided by 2, which is 98.5 rupees per share. But in reality, that's not the case. The first 1000 shares I will buy for 99 rupees. Then the second 500 shares I need to buy for 100 rupees per share. In this way, the actual buy value will be 99.33 rupees per share, not 98.5 rupees per share. Here, please note, since I want 1500 shares, I'm using the two sell codes 99 and 100 rupees per share. If you want to buy more number of shares means, then we have to use that respective n number of sell codes for determining the actual price. Anyway, that actual price minus the ideal price divided by the ideal price in percentage term is called the impact cost. For this case, the impact cost is 0.84%. And just for fun, our imaginary ABC stock is not eligible to be in the Nifty 50 index. I hope everyone able to follow me. Or else, just remember this, lower the impact cost, higher the liquidity in the market and difficult to manipulate the price. However, higher the impact cost, which would be the results of lower liquidity in the market, so easy to manipulate the price. And for the listed stocks, we can get this average daily impact cost value for that respective stock at the NSE India website. So now, let's say if I want to manipulate HDFC Bank share price by 50 rupees per share increase, then how much money I need to add in the current market. Yesterday 9th August, HDFC Bank share closed at 1650 rupees and from the NSE India website, the average daily impact cost is 0.01%. Hence, the price impact for a standard trade or we can say standard impact on the stock, we can get it by multiplying price by impact cost. In this case, 1650 rupees multiplied by 0.01%, which is 0.165 rupees. Then we know we want the price to increase by 50 rupees. Now we need to know the number of standard impact that we need to increase the desired price. So 50 rupees divided by standard impact, which comes as 303.03. Then we need to calculate the traded value for one standard impact. For that, we can take the total daily traded value from the NSE India website, which then divided by the whole day price change and again divided by the standard impact. So the value comes as around 50 crore rupees. And finally, multiplying the number of standard impact with each standard impact traded value, we can calculate how much money we need to manipulate the market. So for 50 rupees increase manipulation in HDFC Bank, we need roughly 15,000 crore rupees. Here, please note 15,000 crore rupees is needed for the whole day average impact cost 0.01%. I took that for easy understanding purpose. But during the trading time, it varies drastically. For example, at the time of yesterday's closing, the impact cost for the HDFC Bank was only around 0.04%. In that moment, I don't need 15,000 crore rupees. At that time, I just need 3,000 crore rupees to manipulate the 50 rupees increase. Hope everyone can follow me. If required, please pause and have a look. This is the whole formula and its description. Now we know how to manipulate the stock, and the same way is applicable for index as well. But the only problem is NSE India website won't give the impact cost value for the index, which they usually give for the stocks. That's fine. We know how to calculate it, which we discussed earlier. But please always remember this. 95% of the daily impact cost of both Nifty and Bank Nifty is 0.002%. As I said, during intraday, based on demand and supply, it will vary, but most of the time the impact cost will be 0.002%. Again, for index, both Nifty and Bank Nifty, we can take the total traded value from the NSE India website. By knowing the impact cost and the total traded value, we can able to calculate the price influence. For last Friday traded value, we need additional 23,400 crore rupees to manipulate 100 points positive on the Bank Nifty. Here, please don't compare with HDFC Bank. There, 50 rupees increase, which is 3%, we need around 15,000 crore rupees. But for Bank Nifty 100 points increase, which is only 0.2% increase, for that itself we need around 23,400 crore rupees. Anyway, then for Nifty to manipulate 100 points increase, we need roughly 59,250 crore rupees. Again, all these are future market total additional money required for the influence. So manipulating the index is very difficult. However, as I said, there are trading times in the stocks where the impact cost increases drastically. Like yesterday, last half hour, HDFC Bank impact cost was around 0.04%. So at that time, I just needed 3,000 crore rupees. So I can easily influence HDFC Bank stock price by 50 rupees per share. Then that 50 rupees per share indirectly will influence the Bank Nifty to increase 421 points. I mean, at present, most of the trading firm got lot of computing power. So the moment when they sense HDFC Bank share price increase, immediately it will create an arbitrage opportunity in both Nifty and Bank Nifty, which we retail traders can't benefit from. But there are a lot of firms who are in the market just to do this arbitrage trading. So when I influence HDFC Bank share, those arbitrage trading firm will influence for me in the Nifty and Bank Nifty. Just for info, for those 50 rupees increase in HDFC Bank share will influence 88 points positive on the Nifty index. I mean, just imagine I'm an electrical engineer who just having normal laptop and some free time in hand, able to find an easy way to influence the market. Now think about the actual trading firm who is from proper finance background and mainly with a lot of computing power, what they can do. Hence, next time, please be cautious when taking the trade, since we retail trading people are betting against the intelligent manipulative system. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.